Look, I need you to pay very close attention to what I'm about to share with you because what's happening right now in the precious metals market is something I haven't seen in my entire career, and I've been watching these markets for decades. Right now, as I'm recording this, there's a massive shift happening beneath the surface of the financial system. Most people have no idea it's even occurring. But the smart money, they're moving fast. And if you're not paying attention, you're going to wake up one day and realize you missed the biggest wealth transfer opportunity of your lifetime. Let me paint you a picture of what's really going on. You know how everyone talks about inflation like it's this abstract concept, like it's just numbers on a screen? Well, let me tell you about someone I know personally. A retired couple, worked their entire lives, saved diligently, did everything right. They had about $800,000 in their retirement accounts, felt secure, felt like they'd made it. Then something started happening. Their grocery bills went from $150 a week to $240. Their insurance premiums doubled. Their property taxes skyrocketed. And suddenly, that $800,000, it didn't feel like $800,000 anymore. It felt like maybe $500,000 in purchasing power. And that number keeps shrinking every single month. Now here's what they didn't understand at the time, but what became crystal clear later. Their wealth wasn't actually disappearing. It was being transferred, silently, systematically, through the mechanism of currency debasement. And this is where gold and silver enter the picture in a way that most people completely misunderstand. See, most people think of gold and silver as investments. They think you buy them hoping the price goes up. But that's not what's happening here. What's actually happening is that gold and silver are maintaining their purchasing power, while paper currencies are losing theirs. It's not that gold is going up, it's that the dollar is going down. And once you understand that distinction, everything changes. Let me show you something fascinating. Back in 1971, when Nixon closed the gold window and severed the dollar's last connection to gold, an ounce of gold cost $35. A decent car cost about $3,500. So you needed 100 ounces of gold to buy a car. Today, gold is trading around $2,000 an ounce. A decent car costs about $40,000. You still need roughly 20 ounces of gold to buy that car. Gold maintained its purchasing power. The dollar lost 98% of its value. But here's where it gets really interesting, and this is what nobody's talking about in the mainstream financial media. Right now, there's a supply crisis developing in the physical precious metals market that's unlike anything we've seen before. And I'm not talking about some theoretical future shortage. I'm talking about something that's happening right now, today, as we speak. The United States Mint recently had to ration Silver Eagle production. Not because they wanted to, because they literally couldn't source enough silver to meet demand. Think about that for a second. The official mint of the United States government can't get enough silver. What does that tell you about the real supply situation? Meanwhile, you've got central banks around the world buying gold at the fastest pace in over 50 years. The People's Bank of China has been adding to their gold reserves for 18 consecutive months. Poland just announced they're accelerating their gold purchases. Singapore's central bank is stockpiling. Even countries you wouldn't expect, like India and Turkey, are loading up on physical gold at unprecedented rates. Now ask yourself, why would central banks, who have access to the best financial intelligence in the world, who have teams of economists and analysts, why would they be converting their dollar reserves into gold at record pace? What do they know that the average person doesn't? Here's what they know. The current monetary system is built on a foundation of debt that can never be repaid. The United States alone has over $34 trillion in national debt. That number is growing by about $1 trillion every 100 days. Every single day, the government has to pay over $2 billion just in interest on that debt. Not paying down the principal, just the interest. And here's the mathematical reality that nobody wants to talk about. There is no scenario where this debt gets paid back through economic growth. None. The only way out is through currency debasement. Print more money, make the debt worth less in real terms, and hope nobody notices that everyone's savings are being quietly confiscated through inflation. But gold notices. Silver notices, and that's why central banks are buying. Now let me tell you about something that's happening in the COMEX futures market that should terrify anyone who understands how these systems work. The COMEX is where gold and silver futures contracts are traded. It's supposed to be a market for actual physical metal. But here's the dirty secret. For every ounce of physical gold in COMEX vaults, there are roughly 100 ounces worth of paper claims on that gold. Think about that like a game of musical chairs. As long as everyone's happy holding paper promises, the system works fine. But the moment people start demanding physical delivery, the whole thing collapses. And guess what's been happening? Physical delivery demands have been surging. The ratio of paper to physical is tightening. The music is getting ready to stop. I want to share a story with you about what happened in 2008 during the financial crisis, because it's incredibly relevant to what's happening right now. When Lehman Brothers collapsed and the financial system started seizing up, something interesting happened in the precious metals market. The paper price of gold actually dropped initially. People were selling their futures contracts to raise cash. But if you tried to buy physical gold, you couldn't find it. Dealers were sold out. Premiums skyrocketed. The paper price said one thing, but the physical market was telling a completely different story. We're starting to see echoes of that right now. Premiums on physical silver eagles are running 30–40% above spot price. That's not normal. That's a sign of stress in the physical market. That's a sign that paper price and physical reality are starting to diverge. And here's something else that's absolutely critical to understand. The industrial demand for silver is exploding. Silver isn't just a monetary metal anymore. It's essential for solar panels, electric vehicles, 5G infrastructure, medical equipment. Every single solar panel requires about 20 grams of silver. Every electric vehicle uses 25–50 grams. The world is electrifying, and silver is the conductor that makes it all possible. So you've got investment demand surging, industrial demand exploding, and mine supply that's been flat for years. The last major silver discovery was decades ago. We're not finding new deposits. We're depleting existing ones. And recycling can't keep up with demand because silver gets used up in industrial applications. It doesn't get recycled like gold does. This is what supply and demand imbalance looks like in real time. And the price? It hasn't even begun to reflect this reality yet. Now, I know what some of you are thinking. You're thinking, but I've heard this before. People have been predicting gold and silver would explode for years, and it hasn't happened. And you're right to be skeptical. But here's what's different now. The geopolitical landscape has fundamentally shifted. We're watching the de-dollarization of the global economy happen in real time. The BRICS nations, Brazil, Russia, India, China, South Africa, they're actively working to create alternative payment systems that bypass the dollar. Saudi Arabia is now accepting yuan for oil sales. That would have been unthinkable 5 years ago. When countries stop needing dollars for international trade, what happens to all those dollars that are currently sitting in foreign central bank reserves? They come home. And when they come home, that's when you see real inflation. Not the 3–4% we're seeing now. We're talking about the kind of inflation that destroys savings, that wipes out retirement accounts, that fundamentally reshapes society. And this is where I need to pause for just a moment, because if you're sitting on $100,000 or more in retirement accounts, there's something you need to know about. I put together a comprehensive guide on how gold IRAs work. It's completely free, and you'll find it in the description below. It covers exactly how you can get physical gold into your retirement account without triggering tax penalties or early withdrawal fees. If you're concerned about protecting your retirement savings from what's coming, it's worth taking a look at. But let me get back to what's happening in the markets right now. The commercial banks, the big players like JP Morgan, they've been accumulating physical silver for years while simultaneously suppressing the paper price through futures contracts. Why would they do that? Because they understand what's coming. They're positioning themselves to profit from the inevitable price explosion while keeping retail investors in the dark. There was a fascinating case a few years ago where JP Morgan was actually fined for spoofing the precious metals markets. They were placing fake orders to manipulate prices while their physical trading desk was accumulating metal. They paid the fine, which was basically a cost of doing business, and kept right on accumulating. What does that tell you about what they really think is going to happen? Let me share another story that illustrates what's at stake here. I know a guy who worked in manufacturing, made decent money, saved consistently. In 2010, he took about $50,000 of his savings and bought physical silver at around $18 an ounce. His friends thought he was crazy. His family questioned his judgment. Fast forward to 2011, silver hit $48 an ounce. That $50,000 turned into over $130,000. But here's the interesting part. He didn't sell because he understood that he wasn't speculating on price. He was protecting purchasing power. Today, with silver around $24 an ounce, he's still holding. And you know what? He's still ahead of where he would have been keeping that money in a savings account earning 0.5% interest while inflation ran at 7–8%. His purchasing power is protected. His wealth is secure, while his friends who kept everything in dollars watched their savings get quietly confiscated by inflation. Now here's something that most people don't understand about the gold and silver markets. They're tiny compared to other financial markets. The entire above-ground supply of gold is worth about $12 trillion. That sounds like a lot until you realize that's less than the market cap of just the top 5 tech companies. The silver market is even smaller, maybe $1.5 trillion total. What happens when even a small percentage of the hundreds of trillions of dollars in global financial assets starts flowing into precious metals? The price doesn't just go up, it explodes, because there's not enough physical metal to absorb that kind of demand at current prices, and we're starting to see the early signs of that flow beginning. Retail investors are buying, institutions are buying, central banks are buying. The smart money is positioning itself before the crowd figures out what's happening. Let me tell you about the mechanics of what happens during a precious metals bull market, because it's important to understand the psychology. It happens in stages. First, the early adopters buy. These are the people who understand monetary history, who see the writing on the wall. They accumulate quietly while prices are still reasonable. That's the stage we're in right now. Then comes the second stage, where the price starts moving and the financial media starts paying attention. More people get interested. Demand increases. Prices rise faster. This creates a feedback loop. Rising prices attract more buyers, which pushes prices higher, which attracts even more buyers. The third stage is where things get really interesting. That's when the general public gets involved. When your neighbor who's never thought about gold in his life starts asking you how to buy it. When mainstream financial advisors who've been dismissing precious metals for years suddenly start recommending them. That's when you see parabolic price moves. That's when silver goes from $18 to $48 in a matter of months like it did in 2011. But here's what's different about the setup we have right now compared to 2011. The fundamental drivers are much stronger. In 2011, it was primarily investment demand driving the price. Today, you've got investment demand plus industrial demand plus central bank buying plus a supply deficit. The perfect storm. And the thing about perfect storms is that they're predictable in hindsight, but they catch most people completely off guard when they're happening. Everyone looks back and says, "Oh, of course that was going to happen, all the signs were there." But in the moment, most people are too distracted by day-to-day noise to see the bigger picture. Here's another angle that nobody's talking about: the energy crisis and its impact on mining. Mining gold and silver is incredibly energy intensive. As energy costs rise, which they inevitably will given the current geopolitical situation and the push toward electrification, the cost of production rises. That puts a floor under prices. Miners won't produce at a loss. So as production costs rise, prices have to rise with them, or supply gets cut, which pushes prices even higher. We're already seeing this play out. Several major mining operations have announced production cuts or delays because it's not economical to mine at current prices given rising energy and labor costs. Less supply, same or increasing demand, you don't need a PhD in economics to figure out what happens next. Now let me address something that I know concerns a lot of people. The idea that the government could confiscate gold like they did in 1933. Yes, FDR signed Executive Order 6102 requiring Americans to turn in their gold. But here's what people forget. That happened in a completely different monetary context. The dollar was backed by gold at the time. The government needed gold to maintain the peg. Today, the dollar is pure fiat currency. There's no gold backing, no reason for confiscation. Could they try it anyway? Theoretically, yes, but the practical and political obstacles would be enormous. And here's the thing. Even if they did, it would be the most bullish signal imaginable for precious metals. It would be an admission that the monetary system is failing, and that gold is the only real money. The black market premium would skyrocket. It would backfire spectacularly. But more importantly, silver has never been confiscated. It's not considered a monetary metal in the same way gold is, even though it absolutely should be. So even in the worst-case scenario, silver provides a hedge that gold doesn't. Let me share one more story that really drives home why this matters. There's a famous case from the Weimar Republic hyperinflation in Germany in the 1920s. A man who owned a nice house in Berlin, a house that had been in his family for generations, ended up trading it for a single ounce of gold just to feed his family. 1 ounce. Because the paper currency had become worthless, but gold maintained its value. Now, I'm not saying we're headed for Weimar-style hyperinflation, but I am saying that the purchasing power of paper currency is being systematically destroyed, and the pace is accelerating. And when you understand that, when you really internalize what that means for your savings, for your retirement, for your family's financial security, the question isn't whether you should own gold and silver. The question is, how much and how fast can you acquire it? Because here's the brutal truth that nobody wants to hear. There's a finite amount of physical gold and silver in the world. When the rush starts, when the general public finally wakes up to what's happening, you won't be able to get it. Dealers will be sold out. Premiums will be astronomical. The opportunity to acquire physical metal at reasonable prices will be gone. And that's what makes right now so critical. We're in that narrow window where the smart money is accumulating but the crowd hasn't caught on yet, where you can still buy physical metal at relatively modest premiums over spot price, where dealers still have inventory. That window is closing. I want you to think about your financial situation right now. Think about your savings, your retirement accounts, your family's security. How much of that is denominated in dollars? How much of it is vulnerable to currency debasement? How much of it could evaporate in purchasing power terms over the next few years as inflation continues to run hot? Now think about what happens if even 10% of your portfolio is in physical gold and silver. Not paper ETFs, not mining stocks, but actual physical metal that you can hold in your hand. Metal that has maintained its purchasing power for thousands of years. Metal that central banks are buying. Metal that's in a supply deficit with surging demand. That 10% becomes your insurance policy, your hedge against monetary chaos, your family's financial lifeboat when the paper currency system shows its true fragility. And here's something else to consider: the psychological benefit of owning physical precious metals. There's something deeply reassuring about holding real money in your hand, about knowing that no matter what happens to the banking system, no matter what happens to the stock market, no matter what happens to the dollar, you have real wealth that can't be printed away, that can't be confiscated through inflation, that will maintain its purchasing power. The families who understand this, who position themselves now while there's still time, they're going to be the ones who preserve their wealth through what's coming. They're going to be the ones who can take advantage of opportunities when assets get repriced in real terms. They're going to be the ones who can help their children and grandchildren when others are struggling. And the families who don't, who keep everything in paper assets, who trust that the system will somehow magically fix itself, who believe that the government and central banks have everything under control. They're going to learn a very expensive lesson about the difference between currency and money. Look, I'm not trying to scare you. I'm trying to wake you up to reality. The signs are everywhere if you know where to look. The central bank buying, the supply deficits, the industrial demand surge, the geopolitical shifts, the debt spiral, the currency debasement. It's all happening right now, in real time, and most people are sleepwalking through it. But you don't have to be one of them. You can take action. You can protect your family. You can secure your financial future with hard assets that have stood the test of time. The question is, will you? Will you take this seriously enough to actually do something about it? Or will you be one of the people who looks back in a few years and says, I saw this coming, I knew what was happening, but I didn't act? Because that's the real tragedy. Not that people don't have access to information. Not that they can't see what's happening, but that they see it, they understand it, and they still don't take action. They wait. They hesitate. They convince themselves they have more time, and then one day they wake up and realize the opportunity is gone, the window has closed, and they're stuck holding depreciating paper while others who acted are holding appreciating hard assets. Don't let that be you. Don't let your family's financial security be a casualty of inaction. The time to move is now, while you still can, while physical metal is still available, while premiums are still reasonable. Because I promise you, when the crowd finally figures this out, when the rush starts, when the supply crunch becomes undeniable, you won't be able to get physical metal at any reasonable price. And by then, it will be too late. The smart money is moving now. The question is, are you going to move with them, or are you going to wait and watch from the sidelines as the biggest wealth transfer of our lifetime unfolds without you? Your family's financial future depends on the decision you make today. Choose wisely.